Good morning. Good morning. Can you hear me? If you can hear me, I want you to drop a comment. You're welcome to today's session. So excited to have you in today's class. If you can hear me, I want to see your comments. I want to see your comments. I was trading yesterday. I hope it was profitable. I made some good profits yesterday on gold. How was it at your hand? How was it? Hope you made some good profit. If there's any pair you want me to analyze, please drop it in the comment section. If there's any pair you want me to analyze, drop it in the comment section. If you have any question, also drop it in the comment section. So we'll start by looking at the fundamentals for the day. Today is 9th of July, Tuesday, and a major news will be released from the United States. Fed Chair Powell testifies by 3 p.m. So we should expect high volatility on USD pairs by 3 p.m. Before 3 p.m. or after 3 p.m., we should expect high volatility on USD pairs. Okay, so that's just the only major news we have for today coming from the United States. That's just the only major news. Okay, so let's go to the charts. If there's any pair you want me to analyze, please drop it in the comment section. Okay, so let's start with GBP USD. GBP USD. So let's start with the daily. So as you can see, yesterday candle closed as a shooting star, right? You can see that yesterday candle closed as a shooting star, a bullish shooting star. And after the formation of a bullish shooting star, we're supposed to wait for the next candle to close bearish before we sell. So if we're just focused on the daily time frame, it means we wouldn't trade today. We would have to wait for today's candle to close so that we can sell tomorrow if today's candle closes bearish, right? But we are day traders. We want to take advantage of the price fluctuations. We want to make money today, okay? We want to make money every day from the market. So what we need to do is switch down to lower time frame. So after the formation of this shooting star on the daily time frame, what we need to do is go down to the next lower time frame, which will be 4 hour. Let's assume the daily time frame does not exist. Let's assume the daily time frame does not exist. So let's go down to 4 hour to see the pattern that formed on 4 hour after the close of the shooting star on daily time frame. So if we're able to identify a bearish reversal pattern on 4 hour time frame, then we should be considering selling GBP USD today. So let's go down to 4 hour. So you can see the pattern we had on 4 hour yesterday. Yeah, we had a shooting star. Okay, we had a shooting star, and the next candle also closed bearish. Can you see that? And also we had a low here that engineered the sweep on liquidity, this low. And as you can see, the market has closed. The candle has closed below that low. That tells us that there is a shift in market structure. The structure has changed from bullish to bearish because this was the most recent higher low. This low is the most recent higher low, and this candle closed below the higher low. That's an indication that the market has shifted from being bullish to bearish. Okay, so my bias on GBP USD based on the daily candle and the price action on 4 hour, okay, is sell. I'm going bearish on GBP USD today. I'm going bearish on GBP USD today. Technically, GBP USD is bearish at the moment. It is bearish. Okay, so let's see if this will be a good price. You can see price started dropping from this point after the formation of this shooting star. That would have been the best entry for GBP USD, which was yesterday. And right now the market is trading how many pips? It's about 25 pips from the price we ought to have entered the trade. So if you're considering selling GBP USD, if you want to sell GBP USD, your initial stop loss should be above the high of this candle, maybe 10 pips above the high of this candle. That should be close to like 40 pips or 45 pips. That should be your risk, and your take profits. If you're risking 40 pips, you should go for nothing less than 60 pips. Your first TP should be 60 pips, which will be 1 to 1.5, and your second TP should be at least 1 to 2. Okay, now as you can see, the current 4 hour is trying to create a support. The current 4 hour is trying to create a support. If this candle closes bullish, you might want to wait for the support to be broken, okay, before you sell. Okay, before you sell. And if you decide you want to sell from the current market price, your stop loss should be 10-15 pips above the high. So my bias for GBP USD is sell for today's market. Okay, I hope that is clear. So that's my take on Australian dollar, sorry, GBP USD, sorry, GBP USD. Okay, good morning, Mr. Peps. Good morning, Mr. Richard Hope. Good morning, good morning. If you are participating in this live stream, I want to see your comment so that I can recognize you. Okay, which other pair do you want me to analyze? GBP USD, I am bearish. Let's see Euro USD. Euro USD, what do we have on Euro USD? Let's start with the daily. So yesterday candle closed as a spinning top after clearing liquidity at this previous high. After clearing liquidity at this previous high, it closed as a spinning top, and this is a bullish spinning top. So we need to wait for today's candle to close bearish before we sell. Mr. Tunji, I can see you. Mr. Olodo, I can see you. Good morning, good morning. Okay, so we need to wait for today's candle to close bearish before we sell, right? If we just focus on the daily time frame, we need to wait for today's candle to close before we sell. Okay, if we don't want to wait for today's candle to close, we need to go down to the next lower time frame to see how the candle closed after the close of yesterday candle, which is a spinning top. We need to go down to the next lower time frame, which is 4 hour time frame. If we are able to identify a bearish reversal pattern on 4 hour time frame, then we could consider selling Euro USD. As you know, Euro USD is positively correlated with GBP USD. So if we are considering selling GBP USD, we should also consider selling Euro USD, because these two pairs 70 to 80% of the time they move in the same direction. So let's check 4 hour. So you can see the pattern we had on 4 hour. We had several candlestick formation indicating change in trend. This was a shooting star. This is spinning top. We had hanging man here too. Can you see it? Now price ought to have dropped after the formation of this hanging man. Price ought to have gone bearish, and after the formation of this spinning top, you know, this is a bullish hanging man. After the formation of a bullish hanging man, we wait for the next candle to close bearish. So this would have been a good entry for uh, Euro USD. After the formation of this bearish candle, that would have been a good entry. Now what happened on this candle, you can see what they did here, because we had stop losses at this previous high. They knew a lot of retail traders would have executed sell after the formation of this pattern. So what they did here was to clear liquidity at this previous high. That was what happened yesterday. So they've cleared liquidity, and you can see the pattern that formed after the liquidity got cleared. A shooting star formed, indicating change in trend from bullish to bearish. So this would have been a best entry for Euro USD. So based on what we have on the daily and 4 hour, I think Euro USD is bearish, is set for sell. Let's see what we have on 1 hour. Okay, so this is what we have on 1 hour. On 1 hour, we have a fair value gap here. Okay, we have a fair value gap here. If you don't want to if you don't know how to identify fair value gap, just apply your Fibonacci tool. Okay, apply Fibonacci. Where's the Fibonacci tool? Okay, Fibonacci retracement. Okay, so apply your Fibonacci tool from this swing high to this swing low. Okay, and wait for price to pull back to a premium level before you sell. Okay, wait for price to pull back to premium level. Premium level has to be above 50, Fibonacci level 50. Okay, you might want to wait for price to pull back to premium before you sell. If you don't want to take the risk, if the risk from the current market price is too high for you, if you're not comfortable with that risk, you could wait. For example, if you execute a sell trade from the current market price, which is around 1.0823, your stop loss will be, let's say, 10 pips above the high, this high. Okay, 10 pips above this high. What is the high price here? I is 1.0844. So your stop loss will be 1.0855. Yeah, 1.0855, and your entry is 1.08. That's about 30 something pips. It's not too high. That risk is not too high. If you're risking 30 something pips or 35 pips, you can go for 50 pips. That should be your first TP. Your second TP could be as high as 70, 80 pips. So that's my take on Euro USD. You could wait for price to pull back, but like I always told you guys, price pulling back to a POI, a point of interest, is a probability. It's not guaranteed. Price can just keep dropping, just keep crashing from the current market price, and you want to be in the trade. You want to be in the trade. So what you should do, if you're trading with 0.1 lot size, let's say that's a normal lot size you use on every trade, 0.1, you can split it into two. Go in with 0.05. If price now pulls back to your point of interest, which is a premium level, you can now go in with the remaining 0.05 lot size. It's better to be in the trade than for you to miss the opportunity when your bias is right. It could be very painful, and that's why you see some people, over trading. That's why you see some people revenge trading, because their analysis was right, their bias was right, but they were not in the trade. They were not in the trade. So after the price has gone far, they want to go into the trade. You understand? So it's best that you go in with a smaller lot size, and later you can add to the trade if price goes to your point of interest or your area of interest. I hope that is clear. So my bias on Euro USD is bearish for today's market. I hope that is clear. We're currently seeing pullback. Okay, the previous 1 hour created a support. It created a support. Okay, it created a support. If you don't want to enter here, you wait for breakout from this support, or you wait for pullback to a premium level before you sell. I hope that is clear. I hope that is clear. I hope that is clear. Can you all hear me? Can you hear me? Can you hear me? If you have any question, just drop it in the comment section. Can you all hear me? I believe you guys can hear me. So let's move to the next pair. Which other pair do you want me to analyze? Just drop it in the comment section. Let's look at gold. Okay, gold. Okay, I'm currently selling gold. I'm in small loss, small drawdown at the moment. Small drawdown at the moment. I think about 10, 15 pips drawdown. So my bias on gold for today's market is bearish. Let's start with the daily time frame. Okay, so yesterday candle closed strongly bearish. It closed strongly bearish, and well, there's something I'm seeing right now. There was a support here, and I think that is the reason for the current rejection. That is the reason for the current rejection. This pullback, this support, this demand zone or support zone is the reason for the pullback. It's the reason for the pullback. So if price breaks this low or breaks this zone, then we should expect gold to drop to this level, this low. So if you don't have a trade on gold right now, if you don't have a sell trade on gold, you might want to patiently wait for price to break this support zone before you sell. Okay, wait for price to break this support zone before you sell. If you don't have a trade on gold right now, my bias on gold this week or for today's market is bearish. Even for the week, my bias is what? Bearish. Let's go down to 4 hour. Let's see what's happening on 4 hour. So okay, good. The what's the time now? I think the previous 4 hour candle, you can see it closed bearish. Can you see this? The previous 4 hour candle closed bearish. Now, after the formation of this bearish candle, I believe a fair value gap was created. That could be the reason for the pullback we're seeing in the market right now. Okay, let's go down to 1 hour. Let's see on 1 hour. You can see we had a fair value gap here on 1 hour, so that could be the reason for the pullback. You can see we had a very little fair value gap here. Okay, so price just hits that level. Let's wait for price to fill that gap. So that's another area of interest. That's an area you can also consider selling gold. Okay, if after price fills this gap, a bearish reversal pattern forms inside that gap. You know the bearish reversal patterns. If it forms inside that gap, you hit it, you pull the trigger, you sell. So it's either price breaks this support for you to sell this demand zone, or you sell if a bearish reversal pattern forms inside this fair value gap and you set your stop loss, let's say 10, 15 pips above this high. Anything that makes price or a candle close above this high, there's a high probability that gold price will keep going up and it could aim for this next area of liquidity, which is this previous high. Remember, liquidity resides at previous highs and previous lows of daily, 4-hour, weekly, and monthly candles. That's where liquidity resides. Okay, so that's my take on gold. You sell if a bearish reversal pattern forms inside this gap, or this support zone is broken. Okay, that is where you should consider uh, selling gold. I hope that is clear. I hope that is clear. Okay, that's it on gold, Mr. Olodu. That's it on gold. Okay, Euro, Australian dollar. Can you all hear me? Can you all hear me? If you can hear me, drop yes. If you can hear me, drop yes. I want to see your comments. Can you all hear me? Okay, so Mr. Pep says we should look at Euro Aussie. Mr. Emmanuel says we should look at GJ. Let's look at Euro Aussie. Euro Aussie. Okay, Euro Aussie. As you can see, Euro Aussie. Let's start with the daily. Let's see how yesterday candle closed. Okay, yesterday candle closed as a spinning bottom. You can see spinning bottom. So what we have on a daily time frame is a bullish pattern. Okay, what we have on a daily time frame is a bullish pattern. So we should be looking for buy setups on lower time frames. We should be looking for buy setups on lower time frames. So let's go down to 4-hour. After the close of yesterday candle, what do we have on 4-hour? Okay, so yesterday candle. Okay, this is today. Yesterday candle. Few minutes. Let me go back to the daily. Daily. Apply my vertical line. Okay. Okay. So 4-hour. So okay. So you can see yesterday candle. This was the last candle for yesterday market. This was the last candle, and you can see the pattern we had here yesterday. This is a bullish reversal pattern. This is a bullish reversal pattern. So why did price pull back? Why did price pull back? I'm sure a fair value gap was created. We had a fair value gap here. If you go down to let's go down to 1 hour. There's a fair value gap here. I think that's the reason price had to pull back. Let's see on 1 hour. Can you see where do we have a fair value gap here? Okay, on 1 hour, we had a fair value gap at this point. Can you see this? I believe we had a fair value gap here. Can you see that fair value gap? I believe you can see it. You can see it. So this fair value gap could be the reason for that pullback. And as that gap been filled, it has been filled, right? Even price went below that gap, and I believe that's because a fair value gap was on 15 minutes or 5 minutes. Let's go down to 15 minutes. That could be the reason price broke out from that on 1 hour fair value gap. Let's see on 15 minutes. So you can see on 15 minutes, can you see the fair value gap on 15 minutes? That is the reason price broke out from that 1 hour fair value gap. We had a fair value gap here. So let's go back to 4-hour or 1 hour. Can you see that? Can you see that? Can you see that? That is the reason it broke the 1 hour fair value gap. You can see. And after it filled that fair value gap, what pattern do you have here? A bullish reversal pattern. This is an inverted hammer and engulfing candle. This is a bullish reversal pattern on 1 hour time frame. So why is price pulling back on Euro Aussie? Probably a fair value gap was created after this engulfing pattern formed, right? It's likely a fair value gap was created and they want to fill that gap before going bullish. That's what I think is playing out on Euro Aussie. So let's see 15 minutes. Okay, 15 minutes, you can see this fair value gap. You can see this fair value gap that was created after the formation of that engulfing pattern. Okay, so this could be the reason for the current pullback we are seeing in the market. You can see, but that gap has not been filled. So if I want to take a trade right now, all I need to do is ensure that my stop loss is far below this fair value gap. I have to ensure because there's a probability for them to come fill this gap. So you don't want to set your stop loss around this area. You don't want to set your stop loss around this area. So it has to be far below this area. So I would advise you set it 10 pips below the low of this candle, 10 to 15 pips, if you want to buy from the current market price. So my bias on Euro Aussie is bullish. My bias on Euro Aussie is bullish. I hope that is clear. it is bullish. I'm looking for buy opportunities on Euro, Australian dollar. So let's look at GJ. GJ, do I have GJ on my list? I'm not sure I have GJ on my list. I'm not sure. I would have to add it to my list. Few minutes. GJ. Oh, GJ. What's happening on GJ? What's happening on GJ? From what I see here, GJ is still bullish. From what I see, but let's see how yesterday candle closed. Yesterday candle closed bullish. It closed bullish. Looks like a spinning top, right? Looks like a spinning top. So we need to wait for today's candle to close bearish before we consider selling, right? We need to wait for today's candle to close bearish before we consider selling. At the moment, I think GJ is still bullish. It's still bullish. After the close of yesterday candle, let's see the pattern that formed on 4-hour. Let's see. So on 4-hour, we have what looks like this is a bearish reversal pattern, right? On 4-hour. But we have, you can see the low that engineered this clear on liquidity. You can see this low here. Until this low is broken, GJ is what? Is still bullish. Until this recent higher low, the most recent higher low is broken, GJ is still bullish. It is still bullish. Okay. But if you want to risk selling, you wait for price to break this low. This is a support level at the moment. You can see this is a support level. This is the second time the market is testing that level. It was a support at this point. Price went up, came back, so since last night, GJ has been in a range. So it's likely going to break out from the high of that range or the low of the range. And since the trend is still bullish, we should be more concerned on breakout from the resistance level. So if a candle closes above this high, which is the high of the range, you might want to consider buying GJ. You might want to consider what? Buying GJ. If you want to sell, you wait for price to break this support before you sell. So my take on GJ is bullish at the moment. My take on GJ is bullish. Let's see what's happening on 1 hour time frame. Okay, so you can see the pattern that formed on 1 hour time frame. This is an engulfing pattern. This is an engulfing pattern. So with what we have on 1 hour, GJ is set for buy. This is a buy setup on GJ. And if we are buying GJ from the current market price, our stop loss should be, let's see, 4 hour. Your stop loss should be at this level. This is the key level. This is about 100 pips. If that risk is too high for you, you might want to just ignore. Okay, you might just ignore GJ. Your stop loss should be at this level, 100 pips, and you go for 150 pips or 200 pips. Your first TP could be 150 pips. Your second TP could be 200 pips. I hope you all can hear me. So that's my take on GJ. My bias on GJ with what I see on the chart right now is buy. All I can see is buy. That is all I can see on GJ right now. I hope that is clear. Is there any other pair you want me to analyze? Let me know. If you have any question, just drop it in the comment section. Which other pair do you want me to analyze? Can you all hear me? I believe you can. If you're here to like the stream, please do. If you're here to like the stream, and if this is your first time participating in the live stream, subscribe to the channel so that anytime I come online, you get notified by YouTube. Can you all hear me? I want to see your comments. Can you hear me? Any question? Is there any other pair you want me to analyze? Let me know in the comment section. Okay, we've analyzed Euro Aussie. Let's see USD CHF. All right, let's see USD CHF. USD let's start with the daily time frame. Okay, so based on the pattern on daily, this is a buy setup. Okay, this is a buy setup on Euro USD. So my bias on USD is bullish. Price pulled back, tested. I think we had a support here. You can see we had a support zone. Price came down to that level, and you can see the pattern that formed. This is a bullish reversal pattern formed at a support level, a resistance which became a support level. So with what we have here, it appears on USD is set for buy this week. It appears USD is set for buy this week. That's my take on USD. Any question? Any question? Any question? Is there another pair you want me to analyze? Let me know. Let me know. Let me know. Let me know. If there are no questions, I would have to end this session. Any question? Do you have any question? I hope all the pairs we've looked at is clear. Any question? Any question? Any question? Any question? No question. Mr. Joseph, Mr. Emmanuel, you have any question? It appears there are no questions. So I would have to end this stream. I appreciate you all for your participation, and I wish you all a profitable trading day. Always remember to set your stop loss. Always remember to apply good risk and money management on every trade you execute. If you don't know the risk on a trade, don't execute the trade. If you don't know the risk on a trade, do not execute the trade. Stick to your trading plans. Stick to your trading plans, and you would earn consistently from the market. That will be all for today. Do have a wonderful day. Bye for now.